Trump just dropped a bombshell. New tariffs. The markets reacted immediately. Panic, red numbers, and headlines screaming crash. But should you, a long-term investor, really be worried? The short answer is not really. In this video, I'll show you two key reasons why. Before we dive in, important note here. I'm not a financial advisor and this is not a financial advice. I'm just individual investor sharing my personal experience from investing over the years. So what happened? On April 2nd, 2025, Donald Trump announced massive tariffs on imports from countries around the world. 34% of goods from China, 20% on the European Union, 46% on Vietnam, just to name a few. This triggered a wave of panic in the stock market. The S&P 500 dropped 10% in just 2 days. And it didn't stop there. China hit back. Just 1 week later, Trump raised tariffs on China again, this time to 104%. In response, China announced 84% tariffs on US imports. The markets kept bleeding. This is why swings are not surprising. Moves like this damaged the US reputation as a stable trading partner. Also, the investors starting to price in a potential recession. Even Goldman Sachs raised the odds of a US recession to 45%. So why the long-term investors shouldn't panic? Principle number 1, no one knows the future. There are tons of opinions out there. Some say we are heading into a major recession with the S&P 500 crashing 80%. Others are more optimistic, predicting the market will end 2025 higher than we are today. But the truth? Nobody knows what is going to happen. One example? November 2024, during the US election, most people were extremely bullish on the stock market as everyone was anticipating Trump's victory will be good for markets due to all of the tax cuts and deregulation he plans. And the results? Well, you're seeing it now. Same thing today. We don't know if the tariffs will stay or how other global factors will play out. Trying to guess short-term market moves is like flipping a coin. What to do then? Principle number 2. In the long run, markets go up. Now let's ignore the headlines for the moment and look at the data. From 1872 to 2024, the US stock market has returned an average of 8.6% per year, adjusted for inflation. Yes, there are up years and down years. If you invest for just 1 year, you have 31% chance of losing money. To me, that's speculation, not investing. However, the magic happens when you look at the longer periods. If you invested for 5 years, the likelihood of losing money falls down to 17%. 10 years period investment is only 9%. And over 20 years, there has never been a 20-year period in the US history with negative returns. That's why I personally invest only for the long term. And therefore, I'm not freaking out from the recent crazy news. Now let's go back in history to 2 most recent major market crashes. The Great Financial Crisis. The market fell over 55%. COVID-19 panic. A 30% drop in just 1 month. People were terrified. But if you zoom out, those drops look tiny on the chart today. In fact, the S&P 500 has grown over 680% from 2004 to February 2025, despite all of the sell-offs. Of course, we don't know if the markets will recover quickly like they did after COVID or the 2008 crisis. But the long-term investor should focus on having a solid plan and sticking to it. What do you think? Is the buy and hold still a good strategy, or the new Trump's policies will create a new era of instability? Let me know in the comment down below. I'd love to hear your opinion. If you enjoyed this video, please consider subscribing as I post new content about investing every week. And if you are into market crashes, check out my video about the .com bubble, where I explain what caused the hype and how it all collapsed. Thanks for watching. I'm Piotr from MyInvest, and I see you in the next one.